Hello, this is Ashton Ekbatani, and you are planning on buying your home. There are three things that you have to look when you're looking for a house: great property, great neighborhood, and great price. I'm going to share with you one of the tools that I'm always using to find this kind of properties, doesn't matter where they are. And we call it Home Index. So if you're ready, we can go take a look at it. Right now we can see the summary report here. This is what we call the home index. It is right now what I'm having in front of me is Toronto Real Estate Board stat for April 2020. Now I'm going to show you exactly what I mean by finding great homes that is gaining value. You don't want to buy in a neighborhood that every single day the value is fluctuating, going down, or is very uncertain. And this is based on 10 years historic stat and data that we pulled out and is in there. Just remember, every month you're going to get a new report that will reflect the transaction and the activities of the neighborhood. Now let's go, and this is almost more than 160 pages, and I can provide this one to you if you're interested. There's a click after this that you can request for the form to send to you. It's free of charge, of course. Now, what I want you to pay attention to is the kind of homes you're going to buy. Are you buying one story? And if that's the case, these are all the information for different neighborhoods. Now, if you have two stories or you are going to target for two stories, now there is a next section coming. Actually, this is one story attached. Very much we're talking about here townhouses, freehold townhouse. And if you go further down, you're going to get into two stories. Now this is two story. Let's start from here. And it said April 2020 Toronto Real Estate Board. Now, just to get you familiar with what's going on here, I'm going to read it to you so it makes sense for you. Now, let's say Toronto, and Toronto is divided into different area, and they call it, let's say, C01, which C refers to the center. Now, if you go further down, you're going to see E, here you go, and W is for west as well. So let's take a look at, since we are here, let's take a look at the two stories homes in Toronto W01. And now what we can see here, benchmark price, this is the average price that in that neighborhood, let's say Wasaga, High Park, of course, is an expensive neighborhood. So the average price is around 1,436,200. Now, to make it easier for you, I'm not going to bother with all this small index information. Let's go directly to the area that's very important. Now, look at 1 year of the growth of this property. Okay, it went only 2%, but don't worry about it. Now, what we are looking after to start with, so that's number one point that you have to pick on, is 10 years growth. Now, unfortunately, I think that's because of the high price here. The growth was not hugely effective here. Now, if you go down in, let's say here, 136.44, where is that? Is Caledonia area in W3. It means within 10 years, if anyone would have bought a property, it would increase for 136.44%, and that was the growth. Now, once you find out the 10 years growth, you can always go back to 5 years. I'm not that concerned about this too, because I know it is fluctuating. And also remember, real estate investment or real estate purchase, it's usually long term. So we're talking about easy 5, or ideally for 10 years you stay in one area. Now, if you look at 1 year growth, it wasn't bad. It's in 1 year it went 9.19% growth, and that's excellent. Now, just for the sake of understanding here, if you come to 1 year, 1 month, so this hiccups is very normal. So I'm not worried about this area. If you are a home buyer, you're looking at finding an area that is growing, is a solid area, and it's attracting a lot of people, a lot of families to that area. This is one ideal place you want to go on W3. Now, for understanding, here we are looking at, let me pick this case. Here you go. Now, in 1 year, this homes in this area, Parkdale, South Parkdale, went negative, means the growth was negative 3.69. Now in 6 months, we see it is start coming back up. In 3 months, it's getting better, and in 1 month growth, you're okay. Now, look at this one, High Park again. A year growth was 2%, 6 months, now 1 year, 1 month, it was negative. So what we should really, if you're interested in this kind of details, what you should look for is anywhere you see a negative here, that is converting to a positive. Here, negative again, negative. So these are went down. It was positive, went back to negative, negative again here. If you see negative becomes less negative, that would be, well, this is getting worse here, negative 10 and 86. So I don't have an example here. This is going down. If you are interested in certain neighborhood, let's say you fall in love with W8 in Toronto, and you're really looking at all this neighborhood, the best time to jump into the market, or if you're happy with this end, 10 years growth, the best time to jump into the market is whenever you see a negative happening here. Bingo, here you go. This is a great area if you want to invest in this area, but the growth is terrible here, 10 years. So forget about that one. Looking at, let's say here 122% growth in 10 years. Now the price are going negative, so that's a good time to buy in that area. Also, the price is not out of reach, 766. It's a great price. Now this home index is offered to everyone, and you have different neighborhoods here in GTA, for instance. Now if you go to GTA around Toronto, you're not dealing with W or C or E anymore, you're dealing with neighborhoods like the cities. Like here we have the city of Brampton, and on the very first line you're going to see a general line for everybody. So this is the average of the rest. So price in Brampton altogether, we're talking about 774. Now, of course, if you go to the details, each neighborhood has its own price tag. And generally speaking, city of Brampton growth was 129. Of course, we never look at this one. We're looking at every single neighborhood, and that's where we want to invest. Look at this one, 134 for Credit Valley. Of course, there are some new pocket of homes there, and it's growing very well. The price is 919. It went negative for now, but I'm sure it's going to come back positive. 144 Central Park. So we can find different neighborhoods here. This is city of Mississauga. It's quite pricey here. Now you go down, you're going to see Milton, Burlington, and Halton Hills, Oakville, etc. So this is a home index. If you are not certain where to go, it's going to be very confusing, and you have to look at first where you want to go. Let's say you want to come to, let me pick Milton for instance. Let's say you want to come to the city of Milton. Now you're looking at the price range. What price range you're looking for? Let's say you're looking for $799 price range. Here, even the city of Milton is a small city, or we call it town, and the homes are very close to each other, so it's not a big deal. So pick the neighborhood that you like. The growth is happening there. This is a good area. Some of these areas are very close to the GO train, so such as Clark or GOATS, and the growth was good. Like you double the price that you paid originally 10 years ago. If you would have bought it for 300, now it's easy around 600, a little bit more. So that's how you work with home index, and I hope this is a great education for you. If you need this one every single month, just send me an email, a request, and I would gladly forward it to you, or click on the link that I provided to you. And I hope this helps out. All the best.